Boys and girls, it's your favorite investor here, Leo DeLeo. And we're talking about Alibaba today. So take a look at this, guys. This company has been beaten down to hell. Like, by so much. Another company that's been just getting crushed. So 52-week range, we're currently sitting at $69.81 per share. 52-week range was $169.94. Now, it hit a high at one point of like $300 a share. It was owned by legendary investors Monish Pabrai, Charlie Munger, and myself. I mean, no, I'm not there yet. But here's the thing, folks. $300 a share at the high in October 2020, so pretty much just last year. Sorry, 2 years ago. 2 years ago, $300. Now we're currently at this bottom. Look at that. I think we are honestly below IPO prices, I think, at this point. Yeah, well below IPO prices. And here's a company that really boggles my mind, and I actually like this company. The reason why this company is under the scrutiny that it's is because of this whole China fiasco. It's a geological issue where you have this company that has phenomenal free cash flow and all these great things going for it, but you don't know if you can trust the numbers that are coming out of China. Like, take a look at this, guys. Like, our free cash flow has been going up like 49% over the last 5 years. The revenue's gone up. The net income, not so much, is down a little bit. But they've been taking away shares, so they're not diluting you. But free cash flow is up, revenue up. The only thing is, though, and I've talked about this company numerous amounts of times in other previous videos, can we trust the numbers that are coming out of China? Can we trust these numbers? And my point is this. If China wants to be this economic powerhouse going forward, I will hammer this point until the day I die, that they have to play ball with foreign investors. They have to be able to be transparent as possible, because here's the thing, folks. You have a business such as this, probably one of the largest businesses in China, and on the e-commerce platform, like pretty much the Chinese Amazon. If the numbers come out to be fraudulent, if the numbers come out to be incorrect, foreign money will be pulled out as quickly as possible. And for the record, I do have a position here in Alibaba for that reason. I said, like, look, you know what? I have a small position. I say they have to be transparent with me, and if they're not, I'm going to pull out my money. And right now, I'm currently at a loss because, well, my average cost is probably in the 160 to 170 range. I'm down. But it's a great opportunity to buy because I've calculated this company numerous amounts of times. You watch my other videos, it's very undervalued. It's extremely undervalued, and I'll run the numbers afterwards to find that intrinsic value if you're new to the channel here. But the main thing is this: do we trust the numbers coming out of China? They have to play ball, because if they don't, they're gonna be under so much scrutiny, and no one's gonna want to invest into the Chinese companies. I know I would, and like that's just common sense. It's common sense. So that is one issue with them. Also, the whole VIE structure. Do you actually own the shares? Did Charlie Munger sold off his shares, so we believe, or did he just transfer them to the Hong Kong exchange, where you don't actually have to showcase that you own these shares or not? Monish Pabrai sold off his shares for owning Tencent, so he did a tax loss harvest, but he still likes this company. He just found a better investment. Running the numbers on Alibaba, here's the thing. So you have this PE ratio currently sitting at 37.37. And 32.07 is our average. Now, some of these numerics are down. The profit margin is down for the trailing 12 months. ROE is down. Our EPS is down. But on average, it's done pretty well. But then you go over here to the board, the financial valuation section of the software, where it takes a look at the cash flow statements, income statements, and the balance sheets. You're seeing what the improvements are being made and what they're doing right. So a 7 out of 10 score isn't too bad in the grand scheme of things. As I was mentioning earlier, share dilution is down, so they're not diluting you, which is phenomenal. Net income is getting hit a little bit, so it's not the worst, it's not the best. But the revenue growth is up. The return on invested capital is slightly below 10%, but it's actually not that bad. 8%, it's not that bad, but we want it to be over 10%. Free cash flow is up, which is incredibly important. Their EPS is up. Debt to equity is incredibly low, and return on equity is also high, and they have a decent current ratio. The only thing is, can we trust these numbers? Are these actual and factual numbers? So what I'm going to do here, folks, real quick, is I'm going to just fill out these lovely boxes. And what this section of the software does is I can do different assumptions. So I can do 3 different assumptions utilizing the historic numbers of Alibaba, what they've done over the last, well, since they IPO'd, and try to get a range of where I think this company is priced at based off of these numbers and projecting them for the next 10 years. So a whole discount and all that other fun stuff. It's pretty green across the board, but let's see. I feel like I know what the answer is, but I'm gonna do super low revenue growth numbers. I'm gonna say, let's say this company grows by like super low amounts, but I'm gonna fill out these lovely boxes and we'll talk about it in just a quick second. And guys, if you're enjoying this video so far, hit that like button, hit that subscribe button. It means a lot to me, it means a lot to the channel. So what I'm doing here, folks, if you're new to the channel, I run those numbers and I try to be as conservative as possible. Take a look at this. I'm going to go back to this section here. So as I said earlier, I'm running super conservative revenue growth numbers. I got 18, 40%, and 43% growth over the last, let's say, 10 years. I'm doing 5, 10, and 15% over the next 10 years of growth. That's nothing. Absolutely nothing. Profit margin. I've cut their profit margin. I've stayed between their 1-year number and their 5-year number. Super, super low. Free cash flow margin, staying pretty much in that 1-year range, really low. Price of free cash flow, 10, 11, 12. It's still below 20, which is what I want to be. PE ratio, still below 20, where I also want to be because I feel like that's a fair multiple. Desired return, lucky number 13, as always. Dude, it speaks for itself. It speaks for itself. Average calculation comes out to be 178.43. That's if you pay that number today. If you pay 178.43 today, you can assume a 10% return on 13% return on average for the next 10 years. Or you can go off based off these numerics. 5% revenue growth with profit margins being 10%, 14% profit free cash flow margin, a price of free cash flow that's at 10, P ratio that's at 12, $82. And you're still getting it today at a discount for $69.81. It's a geological issue. It's a geological issue. That's why this company's stock price has been going down as much as it is. But from a free cash flow perspective, like, here's the value in this business. You're getting it at pre-IPO prices. Not pre, that doesn't make sense. You're getting it lower than the IPO price, right? But the business has been improving so much over the course of this time. And look at that. If people were willing to pay $300 for this company, this is a steal. This is a steal. It makes no sense. It boggles my mind. It literally boggles my mind that someone can love the company at this point in time, granted everything that's going on, and then say, oh no, we hate it. We hate it at this price. We hate it at $60, $70 a share. Meanwhile, the company has done nothing but improve and improve and improve. Like, take a look at that. You're getting, like, this price, beginning price, with all the financial gain in the balance sheets and income statements and free cash flow statements. Boggles my mind. But you have to be able to stomach the fact that there's a potential slim chance, I think, that there's a potential slim chance that these numbers may not be correct. Look, this obviously requires research for you to do. This software I use helps me do this research. I have a position in this business. I'm not going to tell you invest into this company. To me, it's just the logic is that, like, you know what? It's less risky now because, like, my average cost base is $170 ish, 160 to 170, somewhere within that range. I have the opportunity now to buy this company at a lower price, creating more exposure to this business. Am I going to do that? Well, there's other things that I'm looking at right now on the American side that makes a lot more sense. I like Google. I like Amazon, where it's currently at right now. But Alibaba, this could be the play. This could be another play in my portfolio. I got to see what makes sense personally for me. For you, this is where you have to do your own due diligence. Now, this software I have in front of me, if you want to get your hands on it, link in the description down below. Try it out for free, 7-day free trial. If you like it, there's a coupon code. 20% off by using the code founder, available for a limited time. But this software here, guys, it brings you everything. It's a one-stop shop, so you can see everything that's going on from the financial statements. We also have the income statements, balance sheets, and stuff like that. Boring information, if you know what those look like. But we have also the chart section where you can see everything visually, in case you don't want to take a look at that stuff. We have the latest news that's been reported on the company, but there's more features added along the way. Currently, right now, folks, it is in a desktop format, but we're working diligently to get it on your phone, so stay tuned for that. It's going to be so great. It's going to be so easy. So you do this value investing research on the go easy. But here's my process and thoughts on Alibaba. China's economy is growing. This is a business that's going to be at the forefront of providing whether that's jobs and products for the people in China and Asia and other surrounding countries. And dude, look, here's the thing. This company here is prevalent even in North American society. I can't see them going away over the next 10 years. The only thing that could really hurt them is if the numbers are false. That's it. I can't hammer that anymore. And I'm tired of talking about it. I love analyzing this company because it always comes up green because it is undervalued and this company keeps falling in price. Like, maybe now's the time, guys. Now's the time to jump in. But I don't know. It's up to you. That's my take on it. Don't listen to me. But you gotta do what your heart tells you. Anyways, folks, that's the video. If you want to see a stock analyzed, write it down in the comment section below. Love to hear from you. See you in the comments. Take it easy.